Hey guys, welcome back to my channel. For those of you guys who don't know me, my name is Nicole and I'm so happy you clicked on this video. So in today's video, I am going to be sharing with you guys some keywords that you need to know before starting your public accounting journey. So if you are interested in that, make sure you go ahead and subscribe. We are on our way to 3,000 subscribers and I would love your help in getting me there. So if you like this kind of content, if you like me, if you like the vibes, if you like accounting, you know, go ahead and join this growing family. I'm gonna give you guys a chance to subscribe, get settled, get your tea, get your coffee, whatever it may be. I'm gonna get my coffee and then we're gonna get started, okay? So I am going to be sharing with you guys keywords that I have learned that I did not understand during my first year, even when I was an intern, when I started in public accounting. So I hope you guys find this beneficial and let me know if you guys want me to do more of these kind of videos for you guys. All you have to do for that is give this video a big thumbs up, subscribe if you haven't already, and make sure you comment down below to let me know. So I'm gonna sip my coffee and then sit down so that we can start this nice video. The first thing is a lead sheet. What is a lead sheet? A lead sheet is a summary of what makes up one account. So let's say, yes, your bunny is downstairs. You don't need to cry. So a lead sheet is a summary, a summary of an account. So it details all the different items that make up that one account. So let's say your cash account, all line items are all different accounts that make up the cash balance on the trial balance and on the general ledger. That is what is a lead sheet. So that way when you're doing the testing in public accounting, it is broken down by different sections and therefore you have the different lead sheets that all comes from the general ledger and trial balance. General ledger. The next thing you need to know is what is a general ledger, what makes up a general ledger. So a general ledger is literally a listing of every single transaction, all the details that have happened for the entire year. And usually clients break it down to us either for the entire year, and sometimes you get up until a certain month, and then at year end you get the remainder. Something that you need to know about the general ledger is if you are asked by your senior or someone to work on the general ledger to import it somewhere so that you can do testing on a specific account or set of accounts, your general ledger needs to equal 0. So that is one thing when I first started my career I didn't really quite understand. I kind of had forgotten about it from school. Pretty much your general ledger needs to equal 0 before you can do any work on it. And if it doesn't equal 0, then you can go ahead and request help from a senior or somebody else. And if it still doesn't equal 0, it probably means that the client did not give us a good general ledger. And what a good best practice is to just reach out to the client or go talk to them. For the most part right now it's looking like calling them or emailing them and just saying, hey, this is the general ledger that you sent us, and just looking at it, it does not equal 0. Can you please provide us with a general ledger that has a zero-sum balance? Because your general ledger is literally your debits and credits, and you know debits and credits have to equal out, right? The next one that you have to know is a trial balance. What is a trial balance? So every company has a trial balance, and that's literally the base of accounting, the base of our testing. You need a trial balance. And basically what the trial balance is, it is a sheet that summarizes all of the different accounts. So the general ledger gives the accounts in more detail, and then the trial balance sums it up. So you have cash, accounts receivable, and going down the list from there, you have like your fixed assets. All of that is high level on the trial balance, and it's literally assets equals liabilities plus equity. So that is, and so for the trial balance, again, it's that whole debit equals credit thing. And in the trial balance, the accounts need to equal out. So debits and credits need to equal. And pretty much what we do with the trial balance, that is the basis of our testing. So what we do is we get the trial balance, we look at it, and that is how we kind of get started with the audit, because the trial balance is kind of what you're going to see and compare to the prior year and see, okay, what accounts have like major changes in them, what accounts don't have bigger changes. And pretty much with the trial balance, when we look at accounts, let's say we identify the cash account has had a severe change or like a high percentage of change from prior year, then we will definitely be, of course, looking at the cash account, which we always audit anyway. Or let's say that fixed assets in the trial balance, fixed assets has actually gone down from the prior year. So debit and credit. What is a debit and what is a credit? So debit is pretty much what is coming in. A credit is what is going out. You learn it in your accounting class, you learn it in school, you could do a lot more research on it, but literally just know the difference between your debits and credits, because sometimes you're going to be asked to create journal entries or adjusting journal entries depending on the type of client, or you're going to have to pretty much understand if a journal entry is incorrect and as to why. So really knowing what makes up debits, what makes up credits is very important. The next thing that you need to know, or you need to have a high level understanding of, is what is an audit plan. So the audit plan is pretty much from start to finish what is going to happen in the audit. You're going to hear the audit plan a lot. You're going to hear referred to the audit plan a lot, and it's pretty much really just you going into the file of the audit and trying to understand what is it that you're trying to achieve with the audit, what is it that you're trying to achieve with the testing area. That is what an audit plan is, and you need to know that for sure. And with the audit plan, you're able to see what areas are going to be most important, what areas are you going to be focusing the most on, and just creating that game plan. But you're going to be referring to the audit plan throughout the entire audit for the most part, from start to finish. So I think as a best practice, especially if you are an incoming staff, to just really try to take your time, maybe even on the weekend, and just try to understand it a little bit more. Before I keep going, we're gonna pause. And if you haven't already, make sure you go ahead and subscribe. It's free. Join this growing family. And yeah, let's get to 3,000 subscribers, okay? All right, let's keep going. You need to know timesheet, especially if you are in public accounting, especially if you are in Big Four. Your timesheet is they're gonna tell you timesheet, timesheet, timesheet. Don't forget to submit your timesheet. Don't forget to submit your timesheet. Don't forget to submit your timesheet. Your timesheet is something that you really need to keep track of, and I have had my moments where I haven't done the greatest job at this, but pretty much your timesheet is what you fill in when you are working on a certain client in certain areas. So let's say that you have just one client all week that you're working on, but you need to be working on and again, I'm speaking mostly to incoming staff, so you're going to be working on cash, accounts receivable, and then accounts payable, right? So let's say that you are on a client, and in that whole week you worked on different parts of cash. You need to be able to account for that with your timesheet. So you need to say, okay, I spent 4 hours of my day doing a reconciliation. I spent 2 hours of my day doing a bank tie out. I spent 1 hour of my day talking to the client about this cash stuff. I spent time on confirmation.com for this cash accounts, right? So that is what pretty much your timesheet is. You need to keep a track of literally pretty much every minute of what you're doing in public accounting, just because that is how the firm is able to bill out the client. The next word, or the next keyword that you need to know, is client. What is a client? You're going to hear that word a lot as to what is a client. I always tell you guys, client, 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 client. So a client is pretty much who we are auditing for, or who we are doing taxes for, or who we are doing advisory for. So that company, that organization has paid your firm, has to contract you, your team, to be able to do this work for them, because obviously they cannot do it for themselves due to a lot of legal, governmental reasons. So that is what a client is. And of course, let me know if you guys want me to do a best practices on how on dealing with clients, on how it is to, like, let's say email communications, phone calls, and just overall like client engagement, and I'll do that for you. Okay, billable hours versus non-billable hours. You need to know the difference. So like I kind of mentioned with timesheets is if you are allotted 40 hours in your work week on a specific client, that's your billable hour. So anything that you're doing that is client related, whether you have one client all week, whether you have 3 clients all week, you need to know that whatever you're doing for that client is your billable hours, and that is super important. And usually there's a difference like in categories when you're submitting your timesheet where you're going to put if it's billable or if it's non-billable. Non-billable hours is going to be when you're checking your emails, or if you're doing something administrative, like if you're writing an email to a fellow colleague that is not client related, if you are participating in any event, if you are in doing any training, all of that is non-billable time. And then of course when you guys start on your onboarding process, all of that's going to be broken down into for you guys in your training. Controls. What are controls? So controls are pretty much, yes friend, go sit on that, come sit here. All right guys, so as I was saying, controls are pretty much sets of rules that are in place that companies and organizations need to be following so that they can be in compliance with what they say that they're doing pretty much, and for the audit or even for tax and stuff. Cash has controls around it, so there's going to be controls around like who is depositing the money, how is it being deposited, who is authorizing, and even like with accounts payable, who's authorizing payments, who is writing out checks, so different things like that. And so if you hear control, that means a control that's in place. It means a rule that's in place for that particular for that particular area. So yeah, so like let's say with like I said with accounts payable, who is the person that's in charge of signing the checks, who's allowed to sign the checks, who is the person and what is the process pretty much around the whole check signing thing, the whole giving money to people, you know, like with payroll, who is in charge of making sure that the timesheets, if there's any, is accurate so that people can be paid. So things like that. So those are what controls are. The other one is your audit areas. Like I've been saying, you have different areas which we audit. So depending on, we look at the trial balance, we see what areas are in scope, what areas meet scope. And scope is, I guess there's more. Scope is pretty much, we have a threshold as auditors, which you don't tell the client. You never tell the client what is our threshold that we decided, and usually it's already calculated per the audit system, depending on where you work. But that threshold is what we use. So let's say that our audit threshold is, I'll say $1 million, right? So pretty much you look at any account that is over, we'll say that's $1 million and over, and then we scope that in as to those are areas that we're going to test for sure. And there's of course other high risk areas that though they may not be, they may be below scope, that we will still test. But pretty much what you do is all of that is scoped in, and from there you have the different audit areas that are going to be tested. So your audit area can be cash, revenue, accounts payable, accounts receivable, fixed assets, any leases, and there's a whole bunch more depending on the client. And then the other one that I have for you guys, which is going to be relevant because probably not so much for interns, but definitely as a first year staff, you need to know what a walkthrough is. A walkthrough is pretty much a meeting that you have with a client where you kind of sit down with them and go through the process. Depending on who and where you're working, usually sometime maybe the first or second one you're going to go through with your senior. Your senior is going to do the walkthrough and you're just kind of going to watch them and see the kind of questions that they ask. But for the most part, you will be doing a lot of walkthroughs, which is just talking through the client, through the different processes, and then documenting if any major changes have been made, and just trying to revamp that documentation maybe from the prior year to make sure that it has been good. And the last one that I have for you is inventory counts. I hate inventory counts, I'm not gonna lie. I've had some good ones and I've had some not so good ones, but pretty much an inventory count is when you, as a first year or second year staff, you go to a client, and sometimes seniors, you go to a client site, maybe to their warehouse or to their manufacturing plant, whatever it may be, and you literally have to count their inventory. Of course, there's a process that's in place for that prior to the inventory count happening, where well in advance you're going to know how many selections you're going to have to make. And usually if the client provides everything that we need prior to the inventory count, you're going to have your selections made already. And what you're going to do when you go to the client site, to their warehouse, whatever, you're going to be with someone, and you're pretty much literally going to be recounting certain areas to make sure that, as kind of like a spot check, to make sure that whatever they said is on there is actually on there. All right guys, so this is the end of the video. I hope you guys enjoyed it. Let me know, what do you guys think? Did you guys learn more about different accounting terminologies? Did you know about it already? Do you guys want me to keep making these kind of videos for you every once in a while to switch it up a bit? Let me know. And also don't forget to subscribe if you've gotten this far into the video. Subscribe, help me get to 3,000 subscribers. I'm super excited for the giveaway that I'm going to be doing. For this one, it's going to be awesome. So yeah, definitely subscribe if you haven't already. Share this video if you liked it to your friends, your other accounting friends, whatever it may be, and also like and comment, because that way YouTube knows that you guys are liking this kind of content, and that it can keep pushing my videos out there so that we can grow, and so that I also know that you guys like this content, so that I can keep making more for you guys. So without further ado, I hope you guys enjoy this. I love you guys, and I will see you in my next video.